Richard. Good having you on the show. Let's kick off with the strategy you are deploying at the moment where equities are concerned, given the heightened volatility that we're seeing in the system.
Yeah, absolutely. Hi, Bronwyn. Yes, obviously we saw this massive sell-off on Friday and a massive rebound yesterday, and then a little bit of sanity returning to the market with a bit of a sell-off today. I look at the volatility situation at the moment as one of stock picking opportunity and buying opportunity in particular. So, I take a very long-term view, I guess, when making investment decisions. So, if you have a look at an Anglo American, for example, it's come down from 330 odd rand.
Well, it's at 296 rand 37 today. That's where it closed, down 2.75%. So well below that 300 rand level right now.
Yeah, definitely. I mean, the concern for me is that, it might come down a bit lower, but certainly if a company like that gets to around 280 rand a share, I'd be a buyer. And I think there are a number of opportunities like that out there at the moment. So,
just let's pause there for a moment, Richard, because the market seems relatively divided on these industrial diversified miners. Do you go Anglo American? Do you go BHP? Why are you choosing Anglo American over BHP? Is it the recent news flow of that 40% tax being introduced on resource profits into Australia and BHP 51% exposed to Australia?
Yeah, it is. I mean, I'm saying to myself, I want to be exposed to commodities because I believe that, the longer term fundamentals for commodities is good. We've seen good growth numbers coming out of the States. China's having a bit of a breather at the moment. Europe might wobble a little bit. So I'm saying to myself, well, you've got this uncertainty around the Middleton tax situation in Australia. So, hedge your bets by saying you want exposure to the commodity cycle going forward, but you want a company that's going to unlock value in the short term. And to me, that Anglo American is exactly that company. They are selling off their non-core assets. We've seen the continued sale of Tarmac. We've seen the recent sale of their zinc assets, which they got a very good price for, which to me is a confirmation that, guys are willing to pay up for commodity assets at this possibly low point of the commodity cycle.
So you're backing Cynthia Carroll, the CEO of Anglo American, and that management team. Just further news flow out of China today. April inflation is hitting higher levels. Are you not concerned that Chinese demand could be fueling a commodity bubble?
I think it's going to be interesting to see because that's what the market's saying. The market's saying, inflation's up. China have to introduce more stringent monetary policy measures, increase interest rates, and that's going to obviously slow down consumption, and that's going to put a bit of pressure on commodity prices. In the event that doesn't happen, commodity prices don't collapse in a heap from these levels, but they stay at around these levels, maybe come down 5 or 10% in the short term, I think it's going to be confirmation that the commodity super cycle is here, and I think you want to be buying into that at the moment.
Richard, I also want to get your opinion on these retailers that have been looking expensive from a valuation perspective for some while. Massmart today coming out with a trading update saying that total sales for the 44 weeks to the 2nd of May up 8.6%. That's to almost 40 billion rand. The stock hit 120 rand today, an all-time high on Massmart, and closed up 5% at 118 rand 50. Should you be looking at these retailers on the foreign momentum that is driving these stocks higher? Nick Kunze pointing out just a moment ago that the foreign shareholding in stocks like ShopRite and Massmart has gone from 25% to some 45% in this first quarter.
Yeah, no, absolutely right. Look, I think from a South African consumer point of view, I think the consumer, given the fact that interest rates are at these historical low levels, I think consumption has turned the corner for the better, and you're seeing that reflected in turnover numbers like Massmart reported today. One's got to ask yourself, is that not in the price already? And I'm saying yes, that's in the price, and it's been in the price of retail stocks for quite a while now. But that doesn't mean that the share prices are going to come under pressure, and I'll tell you why. I think, one, relative to other emerging markets, retailers are still looking fair value, relatively speaking. They're not looking overpriced. And then, of course, you've got a lot of speculation around foreign retailers coming into the South African market and buying potentially a Massmart or a ShopRite, which is going to be very supportive for those share prices in the short term.
A very quick one, Richard. Do you think that the situation in the Eurozone has been resolved now with the 750 billion euros being deployed into the system?
I think the market has been shown the intent of the Eurozone that they don't want things to collapse in a heap. I think that volatility in the market is going to continue in the short to medium term, because I think there's going to be new news that comes out in time about is Spain the next one to government to collapse? Is Portugal the next one? Ireland, etc. So I don't think any of that fear is dissipated just yet, but I think in the Eurozone supporting this or giving the support for Greece just shows you that the intent is not for the Eurozone to collapse in a heap, and I think that's very positive over the longer term.